What's up, YouTube? Welcome back to another episode of KJ the Investor. This is yours truly, KJ. And without further ado, let's go ahead and hop into the portfolio. As you see right now, the market is closed. Currently, in the investing account, we're sitting at $67,563.73. I'm up on today $231. It's 0.34%. In the buying power, I got a little over $7,000 in the buying power. My options, I got an Irene contract right here. Get ready to expire in March. 4 contracts. I got a bunch of crypto from the Robinhood New Year's. They were giving away the crypto. They were giving away prizes for, I guess, the holidays and for the New Year. So that's what I got in my cryptos, y'all. All right, now into the bread and butter. Got some stocks and ETFs. As you take a look at my stock listing, it's becoming shorter and shorter. I know some of you are probably like, well, what's going on with that? Why are your positions starting to deplete? Well, that's because I'm on purposely depleting them, because I'm setting my portfolio up in another way. I'm trying to structure it different. And I'm gonna go ahead and just kick it off with this one. No particular order, but SoFi Technologies have roughly been going sideways for the past 3 months. As a matter of fact, it's been going down for the past 3 months. Right now, it's at $26.05. 3 months, the stock is down almost 8.5%. Year to date, the stock is down 1%. Last 3 months, 8.5%. 1 month, 3.34%. So SoFi has been going down here and on a collectively. I got 250 shares and some change of SoFi. Well, KJ, I thought you had 500 shares. Yeah, I did. I did have 500 shares and some change. I sold half of my position the other day when SoFi was looking like it was starting to trickle down more and more. So I did get rid of some shares only because we have earnings coming up on the 30th. You scroll down. If you look right here, also look. When I sold shares, it brought my average cost up. My average cost was in the $23 range. Now it's in the $24 range. But my total return, I'm still up over $400 in profit. You come down here, I'll show you what I did. Take some profits the other day when I sold half in the position. Earnings, estimated EPS is 12 cents. It's going to be January the 30th, which is next Friday in the market. We'll see what SoFi does. If it goes up, then we'll profit. But if it goes down, best believe I'm going to pull out the other half of my position, because I don't have time to be losing profit when I'm already up. I don't want to lose none if I'm already up. If you see right here, January 21st, just the other day, I went on and sold 250 shares. And you see realized profit all the way down at the bottom, $416.91. And that was just the other day. So SoFi has earnings on the 30th. With the diluting that's been going on, with the confusion with the company, it's fintech, and I know it's financially a technology company. I understand it's fintech and everything, but the recent diluting and the uncertainty in the market has, I'm not going to say has made me to the point where I don't want to hold a stock, but I actually do have a list of stocks that I really want to allocate some money into that I'm very bullish on. And SoFi right now, for me, the past 3 months I just showed you the past 3 months, the past 90 days, the stock has continually dropped. You guys don't get it. You watch these YouTubers out here talking about, oh, I'm so bullish on SoFi and I'm bullish on this and I'm bullish on that. Well, I understand. But if you look at the EPS, earnings per share, if you look at it, SoFi has been overvalued for a long time. They have to give the stock price a chance to actually catch up, EPS to catch up to the stock price. So in order for that to happen, and since the market has been at all-time highs here lately, for the only way for SoFi, for the EPS to catch up to the stock price is if SoFi contracts. And that's what the diluting actually did. The diluting helped the stock to come down and to give the market a chance to breathe, which is a healthy correction. Don't get me wrong. We need healthy corrections, but it's on a trend, guys. Look at the trend with SoFi. Downward motion, downward slope. Now, like I said, my break-even price was about $23 and some change. Now it's at $24 and some change. The stock is only $26. And as we get closer to earnings, the stock maybe sells off more. Maybe more people buy more and increase. I don't know. But I do know one thing. A bird in the hand is better than two in the bush. What do you mean, KJ? That means if I have one bird in my hand, that's better. If I have profit available to me now, take your profit. Don't worry about the two birds in the bush because you might not can catch both birds and you might end up with nothing. So if I keep holding out and holding out and holding out and this thing keeps dropping, now my profit disappears and now I'm dealing with a negative. And guess what? Positive always beats out negative no matter the size of it any day. It was a point in time, SoFi, I was up over $3,000 worth. And yeah, just like everybody else, I thought the stock would continue to rise, continue to go to the moon, continue to do great. But it didn't. The company diluted. The unexpected things happened out of my control. And just like all the other investors, the company decides to dilute. It's out of our control. So guess what happens? This happens. Now the stock's moving sideways. Now the stock is moving downward for the past 3 months. There's really, if I could really show this for the past 5-6 months, SoFi has really been trending down. I'm gonna say this. Since October was the peak of SoFi. October 24th was like the peak of SoFi. After that, it's just been trickling down ever since, every month. So I'd rather keep profit than give it back to the market, and that's exactly what I'm planning on doing. So keep watching for that. If the price, if they come in hot for earnings, great. We'll ride the momentum back up. But if they don't and they get ready to crash and burn, I will sell out of this position altogether, collect the profits I have, and redeploy and get the live to fight another day and redeploy into another stock, another position for better entry and for more returns. I would not play with it. I'm not loyal to the company. I'm telling you now, as an investor, you cannot marry these companies. As an investor, you have to have the mindset of, hey, I'm here to date you. If you do good in the date, I keep you for now. But if you don't, I got to cut you and let you go. I don't care how long I've been holding on to SoFi, and I've been holding on to it since the summer of last year, 2025, the summer of 2025. But guess what? I would cut SoFi out so fast if it continues to lose share price. I won't go into the negative with it. That's for sure. Okay, next up, let's talk about Irene. Irene, I got 400 shares still. Irene price is $52.91. Just the other day, guys, Irene was just up. Let's see, 1 month ago. Look at that. From the beginning of the year, I've been holding Irene since about 4, 5, 6 months ago. And Irene just hit a high of $58.47, 74 cents. Look at that. But since then, Irene has come back down, $52.91. I sold my cover calls against my 400 shares. There's 4 contracts to collect $2,250. $2,250. And to be honest about it, guys, instead of selling that cover call, if I knew the stock was going to run up as much as it did, I would have just held on to the stock. I would have just held on and not tried to sell cover calls against it because my return, I was up over $4,000. I was up over $4,000 in this stock. That's what I'm talking about, guys. When you see that you got a plus 4,000 down here, total return. Look, right now, my total return, I'm up $1,900. When this thing was at the $58 mark, go back. Come on. Yeah. When it was up there, like that right there, I was up. That total return was over 4,000. But because I was locked into this option contract, I wasn't able to sell at that time and collect that cash flow. And that really would have been awesome if I could have, because guess what? That would help offset. That would have helped offset from the tax harvesting of last year. Listen, guys, I'm in the market to make money. I'm in the market to make money. That's my primary goal with the stock market. That's the primary reason, focus of why I even do the stock market. We're here to make money. We're not here for nothing else. And so buy companies low, sell them high. Buy companies low and sell them high. That's the whole point of it. So, right, excuse me, right now we're in a contract. We're down a little bit, but it's okay because it reached our strike price. It was once upon a time I was nervous that this thing wouldn't even reach my $48 strike price. But here you go. Irene break even is $53.25. Right there. Irene's current price is $52.87. When this thing is get ready to expire, who knows? It could go either way, to be honest. I collected the premium. The $22.50 is in my account. It's mine. And that's okay, and that's mine to keep. So I'm good with that. I lose these 400 shares. I'm fine with that. If the stock price drops back down below the $48, I don't lose the shares. I'm fine with that as well, because guess what? What I do is just be patient, hold the stock until it rises back up to the $58, $60 level again, and then I'll sell 400 shares. I got them in at $48. If I can sell them for $58, $60, that's a $10, $12 return on each share. And I got 400 shares. So either way, I'm play it to my strengths. We're going to make money. That's an extra $4,000 coming in revenue just like that. Bang. So we'll take it. Holding on. So right now we're just going to hold and be patient with Irene and with SoFi. We're going to just see what the markets actually do. And then, Walmart, 118 is the strike price. It's the regular price right now. I got 13 shares. You guys know I had over 113 shares before. I got my shares called away and made $5,600 back in December. Big money grip. Total return right now, I'm up $343. Going to continue to let that do. Continue to collect the dividend and continue just to let that reinvest in itself to buy more shares of the company long term. I'm not worried about Walmart. It's going to be in my portfolio for a while. I'll just keep buying back shares long term. What else? Here we go. VOO, VOO. The S&P 500 right now sitting at $634.74. It's been going wild. I got 22 shares. This is part of my base portfolio. I'm up in the market value, $14,000. Total return, I'm up $40. Now, today's return, I made over $98 in this thing today, but I'm only up total $40. That's because the stock price had dropped yesterday or the day before when the news came out that we actually invaded Greenland. Because 47 up there, he invaded Greenland and the news broke. And so now yesterday or whatever, the market was red. Everybody was red. Everything was down. So that's why it had to recover from that redness and then come to turn green. And that's why we are making our way back up with VOO. Now, QQQ, 621.81. Similar to this is the NASDAQ, similar to the S&P 500. I got 22 shares of this one as well. This is the other half of my base portfolio. Market value $13,731. I'm up not even a cent. Not even a whole cent. But today, total return today, I made $122 in this just to get me back to basically breaking even. 621.81, and then my average cost is 621.81. So we are right on the money as breaking even with that as well. QQQ, 22 shares of VOO, 22 shares of QQQ base portfolio is holding up this portfolio, and I'm liking it. And another thing, guys, anytime I may run into a situation, you might say, well, KJ, you can't trade as much. You're not able to have enough liquidated cash to make more trades like you used to. Well, that's okay, because I'm gonna tell you, if you read the research, a lot of people that trade consistently all the time, constantly lose more money. Why? One, you got fees and market. You got bid and ask fees in the market. The market makers are not on your side. They're not here to see you succeed. They're here to take your money. You're the liquidity for the market, and they're here to take what you do and prosper themselves. So less is best if you want to make money long term in the market. And then for two, I do leave some stocks. I do have some individual holdings in my base portfolio, like SoFi and like Irene. Like I said, I'm bullish on some other companies right now, like more Nvidia. I'm bullish on TSM. I'm bullish on Micron right now, but Micron got to come back down. Micron has been ripping and going on a tear, and I'm very bullish on that company. But I kind of want to exit out of my SoFi. I want to exit out of my Irene, and I do want to jump into some TSM, and I want to jump into some Micron, because those two companies are what I feel like the future is heading to. And I feel like those two companies have incredible moats, and they'll be around for a long time. Next, I'm very bullish on Meta. Meta is shot up today. It went up today over $34 today. Woo! And even in the aftermarket, it went up another $1.67. I mean, Meta is on an absolute tear. And guess who's already been invested in Meta? It's your boy. I got 3 shares of Meta, $1,948. I got it at $623.22. I'm up $78.79, 4% today. And Meta, like I said, just three shares. But hey, Meta's expensive. Look at it right now. I remember when Meta first broke loose for $90 a share. I had a chance, y'all. I had a chance to put $10,000 in the Meta back at $90 a share. And I was just nervous. I was young. I was nervous to pull the trigger at that time. I had it, but I didn't have it, if that makes sense. But I wish I would have did it now, because look at what Meta has done. Meta has been undervalued for the longest because of the last earnings report, which they had amazing numbers. But what made them go low and made them sell off is because they've been spending so much money on CapEx, on CapEx with the hyperscalers. They're one of the hyperscalers. They've been spending so much money on these NVIDIA chips and these microchips and all this CapEx spending. But once you take that away, once CapEx kind of slows down a little bit and catches up to the earnings per share and catches its footing in the marketplace, Meta won't have to spend as much money on CapEx, and what they're going to do with those extra funds, they're going to reallocate it back to the share price, and that's going to make Meta shoot up to the moon. As a matter of fact, Meta is so underpriced right now. It's so undervalued right now. I see Meta being an $800 stock real soon once it catches back up to earnings per share, because that's where it's supposed to be right now. But like I said, because they take off so much money and revenue for CapEx sake, it makes the share price come down, because investors, excuse me, a lot of investors are nervous about it. But I don't look at, a lot of you guys like to trade and look at the technicals and the charts and this and that. And that's great. I know how to read technicals and all that. But fundamentally, I move by the fundamentals. Fundamentally, Meta is a big advertising company. Meta is undervalued. Meta and earnings per share is actually up to $800 a share. Meta is only $649 right now. Meta, I'm super bullish on it. That's why I decided to buy 3 shares and go ahead and get into it. Meta is going to go up. And by me doing that, like I said, I got it back at $623. Today it's been $649. Look, and look at this. At 9:30 today, right there, Meta was at 630 something, 633. And it just kept on going. It just kept going up. And I'm still bullish on Meta. Like I said, right now, Meta's supposed to be a $800 stock. So I'm going to continue to hold Meta for the long term. I'm going to continue to use my portfolio to generate income on a monthly basis as well. Because let me show you, if you don't think my strategy is working, check this out. Year to date. So far, year to date, I'm up over $3,800. Really, earlier, it was over 4. See? It was over 5. Look at there. January 13, over 5,000. Just different amounts. 4,000 right there. Different spots in the market right there. 4,000, about 5,000 right there. So yeah, we're still generating. Also, same thing right here with the traditional IRA, sitting at $54,542.10. We're up on today over almost $300, almost $400 combined. I got $5,400 in the buying power. NVIDIA, I got 122 shares of NVIDIA. I got 26 shares of Palantir. I got 200 shares of Robinhood. I got another share of QQQ and another share of VOO in this account as well. The only one really worth clicking on is we'll click on NVIDIA. Video, very bullish on this company as well. It's very undervalued. EPS got got to catch up to earnings per share. But earning per share has to catch up to the EPS. To the valuation of this company. This company has actually been banging out heck of the quarters here lately. And it's like, well, why hasn't Nvidia shot up through the roof? What's going on with the stock price if they have been crushing all of their earnings? Well, guys, is like I said, it's the way that the macro of the economy is set up. Plus, not just that, it's right now. I'm gonna just tell you this. Right now, this company is very undervalued. Nvidia right now is supposed to be over $200 a share, but it's not. It's only trading at 184, and it continues to go this weird kind of sideways trading for the last couple of months. Like last 3 months, it's only up 2%. For the last 3 months, it's only up 2%. So Nvidia's been going kind of sideways, which is I'm fine with because I'm ready to sell puts on this. I'm ready. I'm gonna what I'm gonna do with this is I'm going to, like I said, I'm gonna raise some capital. What you think I'm gonna do? Fundraising? No, this is what I'm gonna do. As an investor, you gotta know how to raise capital. So what I'm gonna do, just like I did with the buying power right here, I sold half of my shares in SoFi. I'm going to sell more. I'm probably going to sell the rest of my SoFi. And then, like I said, Irene probably is either way right now. It can stay how it is and get called away. It can come down. And I skate with the premium. It really doesn't matter because either way it goes, I'm going to get rid of these and I'm going to be able to sell more on Nvidia. Also, here, Robinhood. Once I get Robinhood back into a winning position, that's going to be another stock. I like Robinhood, but I also like to I like making money off the 200 shares, but I also want to see what else I can do with this market value, the 21,000. Right now, it's really worth 26,000. I'm going to make sure that I wait for this to recover before we try to cash it out and everything like that. So that's what we're going to do with that. We're going to raise the funds and we're going to get into those companies I was telling you about earlier, like Micron, and we're going to get into the TSM, things like that. And this is the Roth IRA, $5,000 in this, and buying power, $130. I got 28 shares of Robinhood, and then I got 3 shares of QQQ. That's all that's in here. Not much to really talk about in there. Now, in the Robinhood total account, I'm sitting at $198.47. So that's where we are right now, guys. Don't get mad. Just be patient. Investing is not a quick fix. It's not short term. It's a long term game. I built my best portfolios that took up a lot of capital, but it's worth it in the end because when the market drops 1% or 2%, my portfolio only drops 2.5%, 3%, maybe 1%. When it drops 0.5%, my portfolio only drops 1%. If the market drops 1%, my portfolio may drop only 2%. And I sleep good at night because we are at all-time highs. The entire market is at all-time highs. So guess what? You need the market to breathe. You need prices to come down so other people can afford to get into them. And I still have the option to get in margin. I still have a plan for that. I'm not on margin. I'm still good, I'm still good to go. So just be patient. It's not about making 6,000 trades a month to get income to retire early. No, I've retired. I'm not on the job and I'm still doing good, living off the portfolio, but also making money in the portfolio so we won't have to go clock in or at nobody else's job. But like I said, I'm getting ready. It's very compelling to sell some puts right now on Meta. It's very compelling to sell puts right now on Nvidia, on TSM, on Micron. Well, Micron not as compelling no more. Let me show you what I mean. Micron not as compelling anymore because Micron is at, wow, 392. It's even higher. 392. Look at what it's been doing all week. In 1 week, it's up about $60. 1 month is up 114. 3 months is up 190. My gosh. Guys, this is what I'm talking about. That's why I said Micron. It is off the chain. I'm going to wait for Micron to come back down to breathe a little bit before I jump into it. Because right now it is not at the point. A good entry point for Micron would be around $334. It ain't there yet. So TSM, look at that. TSM came back down 329. That's pretty solid. That's pretty solid for TSM. But I can see this stock right here being $600, $800 stock real soon. So guys, I'm just waiting on my opportunity to get into those big boys, and then we'll be on our way. If you got any comments, questions, concerns, drop it down in the comment box below. If you enjoy content like this, make sure you give this video a thumbs up. Share this video with somebody you love and you actually enjoyed it, and make sure they might be an investor too. Share it with whoever, man. And then until next time, this is KJ the Investor signing off. Peace.